Thank you, everybody, and Michael, for giving me the opportunity to be here today. We do have a good retention rate, and when Sarah was talking to me about visiting to you today, I said, "Oh, Sarah, we're kind of babes at this, and we're basically on a journey." And she said, "You know what? I think a lot of people in the room will be too. So I'm just here to tell you that this is just." We're real, and this is our story, and it's not perfect yet, but I think we've got a good thing going, and I want to share a little bit with you. Before I get into the meat of the presentation, I think it'd be helpful to give you a little bit of background about our agency and just give you some standards as to where we come from. Our agency was established in 1926. In those 89 years, there's only been 4 owners. The original owners were Mr. Knapp and Mr. Tedesco, which are long retired. The 4th and current owner is Steve Goodhue, who's in the audience today. We are located in Ames, Iowa, which is about 30 miles north of Des Moines. Population of about 65,000. Home of Iowa State University, which may be a little more proud during basketball season to say that than versus football season, but it is what it is. We're on Main Street. We're an old Main Street agency. Our agency, besides Iowa State University, in our community, for as small of a community it is, there's a lot of other large businesses too that are recognizable. 3M has a large manufacturing unit there. Barilla Pasta, Larry, you need to come, has a manufacturing unit there. And a lot of science and technology companies which kind of dovetail along with the university. Our agency is made up of 3 departments, commercial lines, personal lines, and employee benefits. And I think there's some beauty to our percentages there. 42% of our revenue comes from our commercial book, 30% of our revenue comes from personal lines, and 28% comes from employee benefits. Employee benefits is just a little larger than just what you think of as employee benefits. We do quite a bit of individual health, individual life, Medicare supplement, Part D, that kind of thing too. So we like to look at ourselves as kind of a one-stop shop. We have about 2,500 clients, just to give you a perspective there on what size we are. We currently have 11 on staff, and 7 of those 11 have 10 plus years at Knapp Tedesco. So longevity, which I think says a lot about how we treat our staff and what we believe in. Here's a quick photo of our staff plus a few. This was in celebration of a regional carrier in our area, Employers Mutual Insurance. This was celebrating 75 years of being an appointed agency, which is a darn long time. Here's some kind of some fun photos. We believe and think being a part of the community is important. The top picture on the left is a United Way Day of Caring that we participated in and helped build a Habitat for Humanity house. That day nearly had negative implications on our work comp experience mod. Several of us left with injuries that day, but that's what happens when you give insurance agents staple hammers, I guess. So the bottom photo, we work hard, we play hard. This was kind of a fun thing. The gentleman in the black t-shirt is an insured, and he owns a nice boutique and a flower shop, and so he had invited us out. We went out in 2 batches, took our staff out there, and he kind of did a flower arranging 101. So just a lot of fun that we have. A little bit about me. I've had this sent to me over and over again by my kids, by a coworker. A couple of my sisters sent this to me. I thought they thought I was the little boy in the corner, but actually I think I'm the bossy one with the stick. And the stick's actually a pretty good idea. I never thought of that. So, but on the serious note, a little bit more about me. I started in the insurance industry in 1990, straight out of college. I took it on a whim. I wanted to stay in a certain location for my boyfriend at the time, which is my husband now. And so I started in personal lines. Over the 25 years that I've been in an agency, I've sat in a lot of seats. Personal lines, commercial lines, did a lot of bonding in my life. When I did, what I've done the most time is employee benefits. The last 10 years, so I did a lot of insurance early in my career, but the last 10 years, it's flipped-flop. I do a little bit of insurance now, and I primarily am the agency manager, and I manage all of our marketing efforts. We've been an Agency Revolution client, Quantum Cub client for 6 or 7 years. So we have, I've been the one that's taken the bull by the horns there and tried to implement, and that's what I've been doing quite a bit. So other things that I do, I work on our processes and our procedures, workflows. I do all things HR, carrier relations, just run the gamut there. So I run a lot of reports, which might be kind of a nice segue to retention. So kind of a secret that Sarah told me when I was getting ready to prepare for this presentation. She said, I think a lot of people do not track their retention. And the breakout sessions earlier, it sounds like that might be the case. So I'm just going to tell you what our journey has been to track retention, and you can take away from it what you think might help you. I know there are many of you in the room that do track it, and kudos to you. But just to tell you our story, we thought we had good retention just by other cues that we were taking without pulling the information, because you can take other cues from your agency cancellation reports, improve, I think the theory when you look at agency cancellation reports is try to improve on your hits by studying your misses. We also, a very easy way to kind of guess at what your retention would be is to look at your carrier production and loss statements, because they all have an agency retention figures on there. But it's too hard to put all of those pieces together. So to back up, prior to 2014, we did not track retention. We thought we had pretty good retention. So I thought, well, we're all looking at each other saying, what is our retention? What is our retention? None of us really knew what it was. So I set off, and kind of my way of working is to do some research, a lot of research. What's the formula? How do you track it? How do I deal with getting the information pulled out of my agency management system? Is my information that I'm pulling out of my agency management system accurate? So there's a lot of factors that go into it. I started to track it in 2014, and again, not to be boastful, but I tracked it for about 4 months, and our numbers were in the high 90s. So I took it to Steve and I said, I knew we were good, but I didn't really think we were this good. Look at these numbers, and so we're looking at each other, and is this right? So then I went back and researched it a little further. So kind of was on the bandwagon tracking retention in 2014, fell off, and then in 2015 I said, you know what, I'm going to do some more research. Get tracking, and it is what it is. This is a screenshot. All these numbers here of one of our carriers. Again, this is kind of how you can patch it together if you're not tracking your retention. This is from a carrier that's primarily commercial lines, and it's kind of a 5-year snippet. Kind of started okay and then slid and is back to 92. The one on the left is, I pulled this from one of our carriers, primarily one of our personal lines carriers. Can't beat those numbers, 100%. We recently gave them that carrier a book roll, so that might be why that retention is so high. A lot of that business is new business. The one on the right is a carrier production and loss report that we get the numbers by line of business. So that 92 is auto, the 95 was home, the 88 was watercraft, the 100% I believe was personal umbrella, and I think the 89 might have been farm or something like that. But while it's all good information, it's too hard to piece together. From this, can you say, do we need to maybe work on commercial lines versus personal lines? I mean, it's just a guessing game. So I think, it's wise to commit to tracking. And once we committed to tracking, we are a TAM agency, Applied Systems Agency, and I know there's a lot of other agency management systems out there. Some of them will generate a retention report for you with the data you have in your system. I think more so than not, they don't generate a retention factor for you. So you've got to do the work. You've got to pull the information, drop it into an Excel format, and calculate it yourself. And so we are. That's what we're doing. It's not rocket science to figure it out. Once you can get through it initially, the first month or two, it's just repeating the same procedure, month after month. And at some point, you can give it to somebody that just is good at following directions. But this is sort of what I learned as we were beginning to track retention. And I'll just pass this on for any of you that have the urge to track retention when you get back home. You can track it by department, which is what we do. We track it by agency as well as department. I know some agencies track it by carrier, line of business, which might be kind of interesting, producer, and I had a conversation yesterday, somebody even suggested it, Scott suggested tracking it by CSR, which might be kind of interesting. Most of the tracking that you'll do with retention, it has to do with policy count, but I know Nick Lowe's also track it, I believe, by premium. That might be a little bit of a slippery slope with hard market, soft market, or losing and gaining large accounts, but yet another option I'll just throw out there. When you're going to commit to tracking retention, you need to pick your term. Are we going to look at this monthly, quarterly, annual? What do we want to do here? There's two crucial pieces of data. And again, like I said, it's not rocket science. You need to be able to pull forward your policies in force. And then you need to also know whatever term you pick, whether it's monthly, quarterly, annual, you need to know what your new policy count is during that. And there's a formula here that I'll get to in a second. Well, I hate to be misleading about our 98% retention rate. The next items that just to be real, I have to admit that I realize that there's some margin of error in our numbers. And again, this is a work in progress for us. So as I go through our retention numbers and they come out all in the high 90s, I have the urge to want to go back in and check my data, because pulling those policies in force forward to a report, it can be mind-numbing, and then when your numbers are so high, you begin to question, or you have a little bit of a doubt as to what it might be. I will say, when I go back and take our data and go back and check, there are human errors there. And let's face it, we all have staff, and they're human, and they make mistakes. They make mistakes that they don't mean to make. Sometimes they make up their own rules, and they just think it's easier to enter things this way, or, oh, I'll switch that code once it's completely rewritten. Sometimes when you're amidst a rewrite, you've got 6 policies in force that look like they're in force, when in fact they only have 3. So I do realize we have a human error, a margin of error that's human error. I don't know how to measure that. If anybody in this room knows how to measure that, I would be all ears. Another thing too that we've got going on right now, our largest carrier is Cincinnati Insurance. And what they're doing is, with a certain set of BOP policies, as the BOP expires, internally they are canceling and rewriting it, and they issue a package policy with a property GL. So on my books, that is 1 policy that is expiring and 2 that are coming in. Now, wouldn't it be nice if that's how easy we could double our policies in force? But it's not reality. So I know there's a certain margin of error on our numbers. Do I think it's 1%? Probably. Do I think it's 2%? Maybe. Do I think it's 3%? I would probably look like that little girl with a bossy stick and say, no, it's not 3%, because I do double check our data. So here's our retention. Here's my homemade Excel sheet. Here's our retention by agency for 2015, like the last 6 months of 2015. Again, if you take what I just said and maybe pull off a point or two, I think we've got very good retention. Here's another way that I slice and dice it. I want to know what our retention is by department, because while I like math and all of this, I'm not running this just for an exercise in math. I think if there's anything to be learned by your retention number, you need to know the source. You need to know the root of where you might need to grow and to learn. For those of you that don't run retention and don't track retention, here's the formula. I told Bob, I think it's kind of like checking in the olden days when you had to check your gas mileage. You have to have a number when you start, and then you have to wait, and then you have to get a number at the end before you can get your calculation. So basically, you just take your total number of policies at the beginning of the term, and you can pick your term, whether you want to do it monthly, quarterly, annual, whatever. From that, subtract all your new business, and divide that number by the total of number of policies that you had at the beginning of the term, and that's your retention percentage. So to do a little math, little mental math in the room, if we just said you begin your term with 100 policies, go with me here for a minute. At the end of the term, you have 115 policies. And during that term, we wrote 25 policies. So I take the 115 minus the 25, that's 90 out of 100. That's a 90% retention. So again, it's not rocket science, but it's just something that you need to commit and drop it into an Excel format. So again, database errors, unfortunately, those will skew your numbers. You also need to consider rewrites. We don't consider rewrites as new business. Some of your staff may consider rewrites as new business if they are just seeing a new policy roll in. But yeah, there's that human piece that comes into play there too. So. After all of that, after all the mechanics of it, in thinking of, what are the factors to our retention? What makes us have these numbers in the high 90s? And I wish I could stand here and say, it's just one big secret, and I'm going to tell you one big secret, and it's going to be easy. You're all going to learn. But I cannot say that. It's not one single action item that we are doing. It's a lot of things that we are doing that contribute to our retention, and I think it's things that we've been doing for years. I do think there's a little bit of luck involved, because you'll notice the bottom there, I have our community, the makeup of our community. I think that is a large factor in our retention. But there's no one item. So I think one of the largest advantages to our retention is the strength of the independent agency system. We have options. If we have people that run into troubles because of claims or whatever unfortunate events, a situation where their rates aren't reasonable anymore, we have options for those, so it's easier for us to retain those clients. As I mentioned in the beginning, where I said there's a little bit of beauty in the fact that our agency is spread over sort of evenly over commercial lines, personal lines, and employee benefits. We have a lot of clients that we write in all three departments. We've got policies for commercial policies for them, personal lines policies for them, and some sort of employee benefits policy. So again, options and knowing what you can do for them. The knowledge base of our staff, one of the earlier slides said that we have 11 on staff. 7 of the 11 have 10 plus years. A quick story there. I think knowledge is golden. Quick story there, I just bought a car last month, a new car. I haven't had one buying cars is not something that I like to do. The car that I'm retiring or giving to my 16-year-old daughter is a 2003, so it was time. And I went to a dealer in town where we are friends with the owner, and I'm not going to go in and ask for the owner because he's a busy dude. So my husband and I are standing out looking at the Jeeps, and up walks a young gentleman, and wouldn't you know, he'd been there 2 months. So